Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Tariff tap dance. President Trump floats a temporary exemption for imported vehicles and parts so U.S. manufacturers can gear up. But chips and drugs are now in the administration's crosshairs. Looking for alternatives, South African manufacturers search for new markets as they rethink their reliance on the United States. Meanwhile, President Trump signals the U.S. may skip the G20 meetings in South Africa over unsubstantiated land confiscation and genocide claims. And Treasury Secretary Scott Bessent downplays sell-offs in the dollar and bonds, telling us exclusively he does not see systematic dumping of U.S. debt.
I have no evidence that it's sovereign. We are still a global reserve currency, that we have a strong dollar policy. The dollar can go up and down.
Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Johannesburg in Dubai. It's really difficult to keep up with all of the news that's been hitting on the tariff front. But what I will say is the main highlights have been, of course, that 90-day pause that came towards the end of last week. Then you had the exemption for consumer electronics over the weekend. And the latest, of course, being the fact that the Trump administration is considering delaying the tariffs on autos and auto parts. So lots of little bits of good news, I would say, for markets, which is why you're seeing some form of stabilization come through. Yesterday, the S&P had another positive day. And today, you can see that futures not doing a whole lot, leaning sideways. But this, again, on the back of the latest that we're getting in terms of, I would say, a dialing back of what the Trump administration had originally put forward 10 days ago. And since then, we've had so much market volatility that they've had to walk some of those tariff numbers back. So this is the picture today. S&P futures, NASDAQ futures trading sideways slightly towards the red. I would just point out yesterday, I was a bit surprised to see that Apple was only up 2% by the end of the day, despite the fact that those consumer electronics, the smartphone exemptions came through over the course of the weekend. So only 2% higher because, again, once more, they're reiterating that these exemptions are probably temporary in nature. Eurostoxx futures also leaning towards flat today, not doing a whole lot. And then we have the handover from Asia, mostly positive today, up 1.2%. We'll get to Avril in a moment. As for cross assets, take a look at the price action in bond markets because we have rallied back quite substantially now. So 10-year yields at 4.35. Another 3 basis points lower on the session. We rallied about 14 basis points yesterday. Our colleague Anne-Marie Hordern sat down with the Treasury Secretary Scott Bessent, and one of the things they discussed was the disruption witnessed in bond markets last week. And he downplayed the fact that maybe some reserve or foreign accounts had been selling and did point the upward move in yields to deleveraging taking place out of some investors in the financial system, less to do with foreign accounts selling U.S. assets. So something interesting from that interview. USD not doing a whole lot today, again, trading sideways, but the theme continues to be one of dollar weakness. We saw the dollar slip yesterday in trading. Brent also back up to above $65 now, so we're trading about 0.2% firmer, despite the fact that yesterday OPEC themselves cut their forecast for oil demand growth in the upcoming years. So once more having to trim their expectations of how fast oil demand is going to grow, sitting at 1.3 million barrels a day is what they're expecting now. And then gold, once more, all-time highs, up about 0.5% today, just shy of $3,230. Okay, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio, and there feels like some stabilization has been coming through, both for U.S. markets, global stock markets, and, of course, these Asian markets today as well. Avril.
Yeah, Asia stocks are extending gains from a day ago, and this is against the backdrop of that stabilization you speak of, not just for U.S. treasuries, but also there is the sense that all this cautious optimism ultimately can be quite fragile, given how it's headline-driven sort of trading. And we're seeing on the Nikkei, the auto-related stocks, those are the ones that are doing really well today. But as some of our strategists have already highlighted, it looks more like short covering rather than a lot of conviction to buy. So keep that in mind, even as we see the Nikkei among the outperformers in the region today. And I also just highlight that among the asset classes that we've been tracking following the U.S. Treasury sell-off last week, Japan long-end bonds, they haven't really been part of the recovery this week. And part of it is there are these domestic concerns now weighing for bond traders, whether you're thinking about potentially this additional fiscal budget coming from the government to deal with tariffs, or a BOJ that looks like it could be on pause in its fight against inflation. So you're still seeing that long end of things coming under pressure, the 10-year yield hovering at the 135 level, Jumana.
Yeah, and interesting to see that despite the fact that U.S. Treasuries are stabilizing, that's not the case for JGBs here. So interesting to note. Thank you very much, Ava Hong in Singapore. Now, the Trump administration is initiating investigations into semiconductor and pharmaceutical imports, a move that could lead to more tariffs and the broadening of the U.S. trade war. Meantime, President Trump says he's considering a possible temporary exemption on his tariffs on imported vehicles and parts, so auto companies have more time to set up their U.S. manufacturing plants. For more, let's bring in Bloomberg's Bill Ferries. Bill, good to have you with us. Yesterday, Trump told reporters that he doesn't change his mind, but he is flexible. So drawing the distinction somehow between changing his mind and being flexible there. But maybe let's just start with once more the walk back now on autos and the fact that we could see a temporary exemption on tariffs on some of these automakers and auto parts. It feels like a really big deal for the sector.
Yeah, I mean, we're seeing some of that reprieve in the markets today. President Trump basically saying, I think your quote was right on, that he says he doesn't change his mind, but he's flexible. He's showing some flexibility. I think his critics would argue he's showing his sensitivity to some sort of pain. We know that auto companies have been pushing the White House for weeks now to give them a reprieve on some of these tariffs. President Trump still wants to see more of that auto manufacturing, including the auto part manufacturing, coming back to the U.S. You can't build those factories overnight. So I think he's accepting that argument. But I think he's also saying, when he says he doesn't change his mind, that eventually he would like to see those tariffs fully in place. So we'll see if he comes back with a reprieve for the auto sector. Even the whiff of that seems to be good news for some of the big companies right now.
Yeah, and we've got a board up right next to you. Some of the big Japanese automakers up anything between 4 and 5% on the back of that news. But then I said this yesterday, when he gives with one hand, he takes away with the other. He's also saying that he's considering now imposing tariffs on the pharmaceutical industry. What do we know about the scope of those potential tariffs and who would be most impacted?
So he's ordered the Commerce Department to look at the national security implications of both continuing pharmaceutical imports and some other imports. These you have up to 270 days, that's 9 months, to undertake that investigation. But given what we've seen in the Trump administration so far, we're only 80-plus days in. I don't think it's going to take a full 270 days to get a sense of the president's plans. Again, though, this is another sector where it's very hard to build up that manufacturing quickly. A lot of U.S. companies, Eli Lilly, Pfizer, they have big operations in Ireland, for example. They bring in a lot of U.S. medicine pharmaceuticals from there. There's going to be a big question about whether President Trump really wants to go forward in making Americans' medicines more expensive. But that's the threat that's hanging out there now.
Yeah, most definitely. Bloomberg's Bill Ferries, thank you as ever for helping us to make sense of all of these tariff headlines that are dropping. Bill Ferries in Singapore. Now, U.S. Treasury Secretary Scott Bessent is seeking to calm investors' various concerns on topics, including tariff policy, the recent sell-off in treasuries, and questions over the Fed independence. Speaking exclusively to Bloomberg in Buenos Aires, Bessent said there is a first-mover advantage when it comes to trade talks with the White House.
Well, look, the Treasury has lots of things we can do, and but again, I think we're a long way from that. But again, we have a big toolkit that we can roll out. We do regular off-the-run buybacks. We could up the buybacks if we wanted.
Joining us now is Isaac Poole, CIO at Ascalon Capital. Good morning to you. Good to have you with us on our show. Some stabilization coming through with these markets. We've had back-to-back gains for the S&P. You've got bond yields moving lower. We're down about 14 basis points in the last 24 hours. Do you expect this stability to last?
I think that it's questionable that it can be really durable. We've seen that there is just so much uncertainty around these tariff announcements and seemingly a new announcement every day on a new sector. And that level of uncertainty, I think, is going to continue to weigh on risk sentiment, on the economy, and eventually on markets. Perhaps what we're seeing now is just some early hope and wishes that these announcements might delay tariffs for long enough to allow the economy to adjust.
Yeah, if everything just stays at that 10% broad tariff rate, is that a backdrop in which you could see risky assets perform well, or do investors want the complete removal of tariffs, like no tariffs to be imposed at all?
I think investors would love to see tariffs wound back entirely, but there is some nuance to this because if we see a 10% tariff, that is broadly what was promised during the campaign by President Trump, I think that will weigh on growth. Tariffs tend to weigh on growth and they tend to push inflation up. And so that's going to be difficult for the economy to swallow. But at the same time, President Trump also promised to deal with the deficit and the US debt trajectory. And tariffs were an important part of raising revenue for that. So rolling that back too far may bring a bit of focus back to treasuries and in particular yields, and risks a bit of a sell-off in the treasury space. So this is going to be a difficult market and set of circumstances for investors to negotiate and navigate over the next 6 months. And for us, it looks like they probably really haven't internalized those risks.
Yeah. And of course, the investor community is watching out to see how the Fed are going to react to all of this. I thought it was really interesting. Yesterday, we got some comments from Fed Governor Christopher Waller, and he was saying, despite the fact that the last surge of inflation beginning in 2021 lasted longer than I and other policymakers initially expected, my best judgment is that higher inflation from tariffs will be temporary. And then he went on later to say that he would place more emphasis on the fact that you will likely get an uptick in the unemployment rate, i.e. the other part of the Fed's mandate is going to be the area of focus for them, the fact that we could see quite a severe economic downturn. How do you expect then for the Fed to react to all of these moving parts here? And are you of the view that they should be placing more emphasis on the growth part of the mandate than the inflationary impact that tariffs could have?
I think the growth part is the area to focus on, and the challenge will be that temporary increase in inflation could keep the Fed on the sidelines for too long, allowing growth to slow so much that they eventually are forced into emergency rate cuts. And that's, I think, quite a likely scenario towards the end of this year, that we could see 0.5% rate cuts from the Fed as they race to try and get ahead of what could be a rapidly slowing economy.
Do you have a view on any part of the market that should perform well in this time of uncertainty? And maybe it's just gold because, that has performed so well for the first quarter of this year. But can you actually put on trades with any degree of conviction?
I think this is not a high conviction market. And so, yes, you'll probably see some move towards gold from a lot of investors as they seek safe havens. Traditionally, that would have been treasuries, but there's some question marks there, and we've seen that. I think where you'll see a lot of movement is in currencies, which will be the pressure relief valve for a lot of these mixed policies. And in particular, I think traditional safe haven currencies like the yen could really benefit over the near term as we see that play out.
Do you expect the weakness in the USD to continue then?
I think that you could see some near-term weakness against those other safe havens like the yen, but ultimately we expect people to come back to treasuries and say, look, we need a safe haven. The economy is slowing. The Fed ultimately is going to have to cut. So let's get some treasuries at what now looks like pretty good yields. And if that does materialize, I think we may not have seen the bottom of the USD at the moment, but I think we will see more stability and possibly a bit of a rebound in the second half of this year.
Yeah, and certainly sentiment is so bearish that it probably is due for a bit of a support or some form of a rebound. Isaac Poole, thank you so much for joining us today, CIO at Ascalon Capital. Now, coming up, we get more details on the upcoming second round of nuclear talks between the U.S. and Iran. That's next, and this is Bloomberg. Bloomberg understands that the U.S. and Iran are expected to hold their second round of nuclear talks on Saturday in Rome. It follows their first meeting in years in Oman over the weekend, which both sides called constructive. Trump has made it a priority to curb Iran's nuclear program and ensure it never builds an atomic weapon, something Tehran has always insisted it does not want to do. For more, our UAE Bureau Chief Dana Khresh joins us now. Okay, so yesterday they had signaled, both sides, that they were going to continue the conversations. According to our reporting, the second round is going to take place in Rome. What do we know about the second round?
So from the first round that happened last weekend, they said it was constructive and that they want to move forward with these talks. Now, these negotiations are still ongoing. There's a lot to get over here, right? Distrust in the U.S. administration, distrust in the Iran administration as well, and Khamenei and all of that. And I think this time around, it's going to be in Rome from our original reporting yesterday, and it will coincide with the visit by U.S. Vice President J.D. Vance. He's going to be there, though the main mediators here are going to be Foreign Minister Araghchi from Iran and Steve Witkoff, who is Trump's Middle East envoy. We saw Trump yesterday kind of suggesting that Iran might be slow-walking these talks and negotiations. I think he's just trying to ramp up pressure. He wants to resolve this in a diplomatic way, but has always kept this military option on the table. But the military option will involve the U.S. into another Middle East war, into a bigger, fiercer Middle East conflict here, and it will embroil likely, of course, Gulf allies as well, like Saudi Arabia or the UAE, who both said we prefer a diplomatic solution to this. Now, Iran is weakened, and that has been what we know so far from what Israel has done with the waves of airstrikes against its proxies. But how much will Iran give up, and does it see itself as weakened as others see it? And that will be the question. How much will it give up? Because the U.S. wants to end Iran's ability to create a nuclear bomb. Iran says it's all peaceful, but yet again, the levels that they have been ramping up of uranium suggests
They're very close. They're very close. But also, I thought it was interesting that the Iranian foreign minister is saying that sanctions relief have to be a part of the discussions, right? So they're very clear on what they're looking to get out of these. Let me take you just in a different direction, because it seems as though there could be a turning point once again in the situation in Gaza. Israel have floated an idea of a 45-day ceasefire in exchange for the return of half of the hostages. What do we know about the reports that are emerging?
We know from an anonymous Hamas official to these media organizations that they're saying Israel had proposed to Hamas a 45-day ceasefire that would release, I guess, about 10 of the hostages still held in Gaza. Now, I wouldn't be so hopeful that this is ongoing. They're going to send an envoy to Doha to resume discussions. I think the negotiations have been ongoing between the U.S., of course, indirectly. We've got Israel, Qatar, and Egypt. These haven't stopped, and they are floating ideas. The thing with Hamas is that if they give up these hostages, they lose all the leverage they have. Yeah. The only leverage they have are these hostages. And 45-day ceasefire for Hamas means they're just delaying the end of the group. So they might agree on a 45-day pause, but for maybe, 10 hostages or whatever it is. But releasing all these hostages is going to be very difficult for Hamas, because the condition is that they have to disarm, that it has to be the end of Hamas for that war to end in Gaza.
Yeah. Dana, thank you for bringing us the updates. Dana Khresh, our UAE Bureau Chief. And coming up, South Africa tries to navigate worsening relations with Washington. We're live in Johannesburg with the latest next. This is Bloomberg. South Africa's President Cyril Ramaphosa has appointed a special envoy to the U.S. in an effort to mend fraying ties. It comes as President Trump's tariffs are forcing South African manufacturers to rethink their reliance on the world's biggest consumer market. For more, let's go to Johannesburg and our Chief Africa correspondent, Jennifer Zabazaja. Jen, how is South Africa navigating these changing policies out of Washington and the Trump administration?
Right. Jumana, good morning to you. It's been quite a bit, I think, for many countries around the world, but namely South Africa, because, of course, we have heard U.S. President Trump directly invoking South Africa's name, talking about a lot of these policies that he believes, in his words, are racist and go against what the U.S. stands for. But in particular, South Africa is at least trying to find some stability throughout all of this. So you just mentioned there, we did hear President Cyril Ramaphosa name a new U.S. special envoy. He is the former deputy finance minister here, and he is also a special chairman with the company MTN. But in his comments when he made this appointment on Monday, he did say that he's hoping that this new special envoy will advance South Africa's interests in diplomatic trade and bilateral priorities, but also hopefully stabilize what he has acknowledged has been quite a strained relationship between these two countries. But he does mention that this is a very important relationship, bilateral relationship between these two countries. And he's hoping that moving forward, although he does see that there will be some challenges, that hopefully they will be able to find their commonalities and support their own sovereignty moving forward. So, we are trying to see the South African government at least try to forge ahead, especially after what has been quite a difficult past few months. We saw the last ambassador to the U.S. Expelled over, again, misconstrued laws. And so, we're trying to find some stability here.
Yeah, and Jen, it's a big year for South Africa because they're hosting the G20.
Yeah.
A couple of days ago, the U.S., President Trump himself signaled that he may not actually be looking to attend. What do we know?
Right. This was the first time that we heard from President Trump directly that he may not come to this G20 meeting that is happening in November with the leaders. Earlier this year, we did see Secretary of State Marco Rubio signal, or he in fact did not come to the G20 foreign ministers meeting because, again, his opposition to a land law here. Scott Bessent, Treasury Secretary, also sending ambassadors to come and be in his own. He was here in South Africa, his ambassadors, and not him. But President Trump now again signaling that this law, this expropriation law that was signed earlier this year in South Africa, which is similar to what we've seen in many other countries, could in fact mean that he will not attend. But many of the leaders that, at least in our indication, they're trying to see potentially this is an opportunity then for a lot of these G20 countries then to focus on where there is unity if in fact President Trump does not come.
Jen, thanks so much. Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg. Well, coming up, President Donald Trump's administration has pressed forward with plans to impose tariffs on semiconductor imports. We discuss the outlook for the chip sector with Bernstein next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Tariff tap dance. President Trump floats a temporary exemption for imported vehicles and parts so U.S. manufacturers can gear up. But chips and drugs are now in the administration's crosshairs. Looking for alternatives, South African manufacturers search for new markets as they rethink their reliance on the United States. Meanwhile, President Trump signals the U.S. may skip the G20 meetings in South Africa over unsubstantiated land confiscation and genocide claims. And Treasury Secretary Scott Bessent downplays sell-offs in the dollar and bonds, telling us exclusively he does not see systematic dumping of U.S. debt.
I have no evidence that it's sovereign. We are still a global reserve currency, that we have a strong dollar policy. The dollar can go up and down.
Well, it's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. You would be excused for having a tariff whiplash, so to speak. So many headlines coming through over the last few days. But what we do know, and I recapped this at the top of the show, but I just want to recap it again. The good news, of course, being that 90-day pause that was introduced towards the end of last week. Then over the weekend, we got the exemptions on smartphones, on some consumer goods, on electronics. And then the latest, just overnight, President Trump saying that he's also thinking about a reprieve for auto and auto parts, but he's also considering tariffs on pharma and on semiconductors. So giving with one hand and taking away with the other. So that's a sort of like an overview of all of the tariff news that we've got. But mostly speaking, we've been seeing some stabilization in markets, back-to-back gains for the S&P and for the NASDAQ the last couple of sessions. Today, futures are leaning towards the red, but trading sideways. So a bit of stability prevailing. European markets not doing a whole lot, but of course coming off a better day yesterday. And then the handover from Asian equities mostly positive today too, up 1.3%. Seeing a good jump actually in some of the automakers in Japan this morning on back of that news. But let's switch over because bond markets, which are right at the eye of the storm last week, are moving in the right direction now. We've come down quite a lot. We've moved about 15 basis points over the last 24 hours, and another 3 basis points lower today. We just heard Scott Bessent in the headlines speaking to Anne-Marie Hardern saying that they're not overly worried about the moves in bond markets, and they do have tools, if necessary, to bring stability back to that market, but they don't need to activate them at this point in time. Similar theme for the USD. It continues to trade heavy. Even though we're not selling off as much as we did towards the end of the week last week, it still is struggling to get a sustained bid, which tells you, again, a lot about how investors are viewing the greenback here. And then Brent is seeing a bit of a rebound today, up 0.3%, trading at around $65. OPEC trimming their oil demand forecast for the rest of this year and next year. Interesting, but they're still above other estimates, including the IEA and Goldman Sachs analysts, for example. But Brent seeing a bit of a recovery this morning. And then gold, which is something we've been talking about every single day, another all-time high, up 0.5% this morning, up 22% year-to-date for the safe haven. All right, let's pick up the conversation as well and check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, run us through what you're seeing today.
Yeah, Jumana, as you just alluded to, Asia stocks running higher for a second day, helped along by the stabilization in U.S. Treasuries, but also tariff headline driven in terms of the gains for auto stocks. Those are the ones that are leading the way in the region today, not just in Japan, but also in India. They are among the top gainers on the Nifty, on the Sensex, the major indices in India. And this is helped along by the idea that maybe we see a tariff reprieve for auto. But also keep in mind how when it comes to the sort of pecking order in economies that could be first in line for tariff talks with the US, that includes the likes of India. So helping that outperformance today. But flip the board, it is also the idea of, for India, how there are still these strong domestic drivers and trade exposure relatively low compared to other economies in the region. And for this reason, if you take a look at its performance versus China's CSI 300 in the past week, it's actually been edging higher, forging gains versus the Chinese benchmark. And this is the point that MLife's Mary Nicola is making, that the trade war is actually recasting the EM playbook, and something we could see continuing as long as Beijing's stimulus in the face of the trade war remains elusive. Jumana.
Yeah, well, all eyes will be on those GDP numbers coming out of China tomorrow. So something to watch out for that part of the world. Avril Hong in Singapore, thank you. Now, Fitch Ratings has upgraded Nigeria's credit rating to a B from a B-. The agency cites improved policy credibility and reduced near-term risks to macroeconomic stability. Bloomberg's Nigeria Bureau Chief Anthony Osei-Brown joins us right now. Maybe let's just start with this upgrade announcement out of Fitch. Did it come as a surprise to market participants?
Not really. It's been expected has been expected at least for some time. The markets were already pricing it in. Nigeria has done a lot of reforms in the last 1.5 years, and it was expected that the credit rating agencies will reward those reforms because we've seen macroeconomic indicators start improving. So it was sort of expected, and the market sort of priced it in ahead of the release of the upgrade. Yeah.
Yeah. Anthony, earlier on, we were speaking to Jennifer about sort of what some local manufacturers are doing in reaction to all of the policy announcements that have been put through from the White House. And of course, there's a special situation because of the political friction between South Africa and the U.S. But talk us through what has been the reaction out of the investor community to Nigeria, and also bear in mind that Nigeria, oil exporting nation, and the price of oil has also been plummeting as well. So I guess it's a double whammy. You've got both tariffs and lower oil prices.
Yeah, for Nigeria, it's a bit unique. Oil is the main export to the U.S., comprising almost 90% of its exports to the U.S. So, and that's exempted. So basically, Nigeria is not directly impacted by the tariffs, as Nigeria doesn't export much of non-oil products to the U.S. But the drop in oil price is a huge risk off for investors in Nigeria. Most of Nigeria's foreign exchange earnings, at least 90%, comes from oil exports. So with oil prices going down, that has become a big incentive for most investors. And there's been some sort of pressure on the currency, and we are seeing some sell-off on the bonds until yesterday when the credit upgrade saw some turnaround when the bonds gained slightly. But if oil prices keep dropping, keep falling, then we're likely to see more sell-off in Nigerian assets and a continuous pressure on the currency. Yeah, but the tariff is not the biggest risk for Nigeria currently.
Yeah, so interesting. Great to get your perspectives on the Nigerian economy. Anthony Osei-Brown, our Nigeria Bureau Chief in Lagos. Now, the Trump administration is beginning investigations into semiconductor and pharmaceutical imports, a move that could lead to more tariffs and the broadening of the U.S. trade war. Joining us now is David Dye, Managing Director and Senior Analyst for Japan Semiconductor at Bernstein. So much to discuss with you, but maybe let's just start with the latest. We'll start with the most recent bit of news out of the Trump administration that they are weighing up the potential of tariffs or imposing tariffs on the semiconductor space. How much of a blow would that be for the companies that you follow?
Yeah, it really depends on the exact amount of tariff and what is the format of tariff. If they decide to impose a broad sectorial tariff of high tariff rates, like autos previously were tariffed at 25% until this potential pause. If semiconductors and semiconductor equipment, especially if all the electronics are tariffed at that rate, that would be a huge impact on not only the semiconductor companies and electronic companies, but also, I would imagine, to the U.S. economy and inflation as well.
Yeah, but from what I understand, the U.S. doesn't import that many semiconductors from China. Most of the imports come from Japan, Taiwan, if I'm correct. But correct me if I'm wrong here. And so this is less of a China-focused decision and more of a sectoral decision that will hit other countries in Asia.
You're absolutely right. So I would look at the potential semiconductor tariff and the previous exemption of the electronics. I would look at these two separately. The previous exemption on the electronics was mostly on China because without the exemption, the electronics like smartphones and PCs that are imported from China would be tariffed at 145%, which is impractical and would be a huge burden for the companies as well as for the U.S. consumers. And the U.S. imports about 100 billion of these products from China. So that exemption was definitely a relief for the industry as well as for the consumers. On the other hand, the semiconductor tariff that President Trump is talking about, he said, or the White House spokesperson said, it's going to be a sectorial. It's not going to be targeting a specific country, but instead it's to bring the manufacturing onshore. This is for national security, to quote unquote, and this is because This is very consistent with the policy for the last couple of years, where the U.S. would like to bring more semiconductor manufacturing to the U.S. onshore and reduce reliance to Taiwan, to Korea, South Korea, and other regions.
Yeah. I want to pick up on something you said earlier about the smartphones exemptions. I read a statistic saying that the Apple account for, or the iPhones account for about half of the smartphones that are sold in the U.S., and about 80% of those smartphones are manufactured in China. So Apple obviously very exposed to China from a hardware perspective. But there has been talk about Apple perhaps moving its supply chain, moving its manufacturing hubs away from China to India and placing more emphasis on India. How feasible is it to do that in an accelerated timeline? How long would it take to actually move these manufacturing hubs out of one country in its entirety to another?
Yes, the move for Apple to move the manufacturing base from China to Southeast Asia, Vietnam, India, it has been ongoing for the last 7-8 years, as far as I can remember, at least from 2018. When there was first the talks about the tariff on China, that's when Apple started making the move. But as you quoted, over the past 7-8 years, limited progress has been made. Still 80% of the iPhones are made in China, which shows there is a lot of difficulty, a lot of challenges in making the supply chain moves, because one, you have to look at not just the final assembly, but the entire supply chain, and two, there are a lot of other issues that you have to consider, not just the equipment. Equipment is easy, right? But there is also labor, there is also land, there is also utility. There are also a lot of the supporting infrastructure and functionalities. Those are not very easy to move. I'm sure with this new change, Apple is going to move at an accelerated rate, but still there are certain things that China is really good at, that there is good reason why China has been the manufacturing hub for the globe.
Yeah, I'm just looking at the semiconductor index in the U.S., the Philadelphia Stock Exchange Semiconductor Index. It's had a torrid start to the year. Do you have a view on how the industry or how the sector should perform in the latter half of the year? Is it very difficult to get that clarity in the absence of clarity on what the Trump administration is going to do on tariffs?
I think you're absolutely right. It's very difficult to make a call on the index at this level, because policy is changing every day, and there are a lot of moving parts. I think President Trump mentioned there is going to be tariff on semiconductors. Again, we don't know what is the scope, and we don't know whether it's going to start taking effect immediately after the announcement, or whether there are certain companies that will be benefiting a bit more. So giving you an example, TSMC, the most important semiconductor manufacturing company in the world, they just promised to invest $100 billion additional capex in the U.S. to build new fabs and new advanced manufacturing sites to help the U.S. Would they, benefit from, or rather be better off compared to a few other semiconductor manufacturing companies if there were this new tariff to be imposed, right? So all these uncertainties making it extremely difficult for investors to place a bet as well.
Yeah, uncertainty, theme of the last couple of weeks. David Dai, Managing Director and Senior Analyst for Japan Semiconductor at Bernstein. Thank you so much for joining us. And coming up, soaring ahead, Dubai Airport is the world's busiest airport. We look into the travel sector next. This is Bloomberg. Dubai International Airport has extended its lead as the world's busiest international airport. A report by the Airports Council International found the total number of passengers in Dubai jumped 6.1% last year from 2023. For more, we're joined by Bloomberg aviation reporter Lynn Al-Rashdan. So Dubai International, technically the busiest airport in the world. I also thought it was interesting that the levels have actually surpassed pre-pandemic levels now. So even busier than it was, say, 5 years ago.
Yeah, this is revenge travel. So it's surpassing, and every now and then they're raising forecasts for what they expect travelers to be coming. And they're even investing $35 billion into a new airport that should be ready in 2035. I mean, it's travelers, they're keen to pay, you know, they're paying the high prices. There's people coming to Dubai, expats, tourists. Dubai is becoming more of a, you know, a destination even in the summer.
Yeah.
All of this is contributing to.
Yeah, I mean, Dubai is also a connector, right, between East and West. So I would expect a lot of it is transit passengers coming through from West going to East. But how does the trajectory of Dubai compare to the trends that we're seeing in global travel? Is global travel also picking up, or is this a specific Dubai phenomenon?
So global travel is picking up, but specifically to Dubai, it's increasing more. Since the pandemic, Dubai has been more open to travelers. It's growing as a destination, and you have Emirates that is really, it's one of the best airlines in the world. It's attracting more passengers. More people, as I said, they're willing to pay, so they're paying for that luxury. So Dubai is specifically increasing more.
Yeah, and the biggest concerns, I say, to the outlook, I mean, we've spoken about geopolitics. It hasn't had that much of an impact on the number of passengers passing through Dubai airports. But what about airport capacity and airline capacity?
Yeah, airline capacity, that's one problem. Every airline has delayed jets. The capacity for the airport, while they say that a new airport will be ready by 2035, we're not quite sure that they'll be able to finish it by then. The numbers are going to surpass what the capacity for the airport is, but then you have the bigger geopolitical problems. A lot of the airlines are worried about Trump tariffs, and some of the airlines are delaying getting Boeing jets because they're worried about tariffs. So all of these can be contributing factors to global travel and kind of economic uncertainty.
Yeah, of course. Tariffs wreaking havoc everywhere. That was Bloomberg's aviation reporter, Nina Reshtan. Thank you so much for the overview. Well, coming up, President Trump also floats tariff reprieve for automakers as he attacks the EU over their car exports. We're live in Berlin with the latest next. This is Bloomberg. President Donald Trump says he's exploring possible temporary exemptions to his tariffs on imported vehicles and parts to give auto companies more time to set up U.S. manufacturing.
I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places, and they need a little bit of time because they're going to make them here, but they need a little bit of time. So I'm talking about things like that. But the European Union is taking terrible advantage. They don't take our food products. They don't take our cars. We have millions of their cars, BMW, Volkswagen, Mercedes-Benz, many others. They come in by the millions. They don't take, there are no Chevrolets in Munich, I can tell you that.
For more reaction from Europe, let's bring in Bloomberg's Oliver Kirk in Berlin. Well, he listed all of those European car companies that you watch and follow very closely. How do you think European automakers are going to react to this latest news that Trump is considering a reprieve on auto parts, but temporary in nature?
Yeah, Juman, I can confirm I've never seen a Chevrolet in Munich, but as far as the automakers are concerned, particularly the ones in the United States, I mean, this is a huge lobbying effort that we've had on the part of the automakers to basically not batter them even further. And just to remind people where we are on the tariff story with the auto sector, we're talking about 25% auto tariffs on cars going into the United States, but you had that partial reprieve, Jumana, on these sort of low-cost parts. That's the key part of this conversation until May the 3rd, and Trump is talking about extending that even further because for these car makers, it's one thing to have the sort of finished product, the big engine blocks, those sorts of things created domestically in the United States. It's those little parts that were really going to create a big headache for these car makers. And you saw the rally if you look at the sort of U.S. car sales, it shows you how basically sensitive this market is to any kind of good news, wanting to immediately price it. But as you mentioned, Jumana, this is a temporary relief potentially in terms of the long-term architecture of what the Trump administration wants to do. Nothing has changed sort of too fundamentally. And for the European car makers, of course, they're already being hit by that 25% tariff going into the United States. But many of these European car makers also have their own plants in the U.S. And Jumana, as this sort of tariff regime changes every couple of days, maybe we're avoiding the sort of worst-case scenario for these automakers. We have a new concept probably of what a worst-case scenario looks like. But as we've been talking about for the last few weeks, another thing that's close to the worst-case scenario is uncertainty, and that is what we get continuously from this Trump administration on this question of tariffs.
But the EU's trade commissioner is in Washington for talks on tariffs. Yesterday, he put up a post on X floating the potential for zero-for-zero tariff offer on industrial goods. Do we think that's going to fly?
Yeah, let's go through that very quickly. We'll just go through what he said exactly. He says the EU remains constructive and ready for a fair deal, including reciprocity through our zero-for-zero tariff offer on industrial goods and the work on non-tariff barriers. Achieving this will require a significant joint effort on both sides. Listen, the zero-for-zero arrangement that we're hearing from Šefčovič there, we heard from Ursula von der Leyen, this effectively would create a free trade arrangement between the European Union and the United States. Not entirely sure that that is what the Trump administration wants. And when we think about kind of what the tariffs were previously, before the last couple of weeks, between the EU and the U.S., there was only about half of a percentage point on average between the tariffs in the U.S. and the EU, which takes us to this key question, the non-tariff barrier. These are the kinds of things that are much more difficult to negotiate because we don't have a clear idea yet from the Trump administration what they would like to see relieved. We talk about value-added tax, for example. Peter Navarro over the weekend. We've talked to several finance ministers in Europe last week saying that value-added tax is basically just a sales tax. And there is a real feeling here, Jumana, that do the Europeans really want to have domestic legislation, whether on tax, whether on food standards, coming from Washington, D.C.? That is at the heart of these very strange and very difficult discussions on the non-tariff barriers.
Yeah, veering into regulation, which, as we know, is extremely complicated, complex in the EU. Bloomberg's Oliver Crook in Berlin. Thank you, as ever. Okay, let's take a look on how equity futures are faring. We've sort of dipped to the red now after some stabilization coming through in yesterday's session. All of these futures leaning negative, down about 0.1% as we head into the European Open. Markets digesting the latest announcements from the Trump administration on tariffs and more. But that was it for our show, Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Stay with us for Daybreak Europe.